Welcome to our educational channel, which is special in accountancy. Today we will discuss very important objectives on PPI, and that is known as profit prior to incorporation. So let's we discuss all the objectives one by one within short period of the time. So first, for calculation of the pre-incorporation interest to debenture is dash. So this always comes in the post-incorporation period. So our answer is a B. After that, second, for calculation of the pre-incorporation salary to director always written in the post-incorporation period. So our answer is a B. After that, for calculation of pre-incorporation salary to vendor, always we have shown the pre-incorporation period. So our answer is A. After that, for calculation of the pre-incorporation profit income tax, always divided on the allocated in the ratio of taxable income or profit. After that, for calculation of pre-incorporation profit, audit fees is very important. Always divide in the time ratio. This has special notes also, which we will study in detail when topic will be discussed in theory. For calculation of the pre-incorporation profit, depreciation always charge on the time ratio. So answer is a C. After that, for calculation of the pre-incorporation fixed expenditure always divided on the time ratio. So our answer is a D. Fixed expense always divided on the time ratio. After that, for calculation of pre-incorporation variable expenses always divided into the sales ratio, because this is always depend on sales. Sales increase, profit increase. Sales increase, profit increase, and sales decrease, profit decrease. After that, for calculation of pre-incorporation insurance is always divided in the time ratio, because this is always fixed, depend on time. So always divided on time ratio. After that, for calculation of pre-incorporation postage is always fixed, and fixed expense always divided on the time ratio. So our answer is a D. After that, for calculation of pre-incorporation discount allowed related to the sales. So this always depend on the sales ratio. So our answer is a C. It is allocated in the sales ratio, because this is variable expenses. All the variable expense always divided on time ratio. Next one, for calculation of the pre-incorporation sales commission always divided on the sales ratio, because this is variable expenses. After that, profit prior to incorporation are available for the purpose of none of the above. We cannot use for the payment of dividend. We cannot use for the interest on debenture for the payment. We cannot use for the payment of cost of fixed asset. So out of this, answer will be none. After this, for purpose of the calculation of PPI, gross profit is always divided on sales ratio. In absence of this, we will divide it on time ratio. But whenever the sales information is given, we have to find out the sales ratio. So next one, the profit earned after incorporation is always treated as a normal revenue, profit earned by the company. And when the company earned the before, that is a PPI, that is treated as a capital reserve. After we treat as a normal revenue, because on this we have to pay the income tax. After this, preliminary expenses written off should be charged to dash, always in the post incorporation period. After this, PPI should be transferred to dash, capital reserve. So whenever we earn the profit which is earned before the DOI, that is called date of incorporation always treated as a capital reserve, and post we treated to the normal profit on which we have to pay the tax. Next one, for the purpose of calculation of the PPI, gross profit divided on the sales ratio, because based on the assumption that the amount of gross profit ratio is the same during the year. So answer is A. And last is thank you for watching and all the best for your exam.